I think that people are underpricing the upside in equities, in crypto, and everything. They don't realize how badly all these governments need to print money. Yes, it's going to end in absolute Armageddon at the end of the cycle, whenever that is. But I don't think we're there yet. Governments are only starting to get the mojo back about, I'm going to print money to buy defense goods, to hand out handouts to the population. We have a lot of big societal choices. And usually when humans have big societal choices, the government chooses to print money first. So I think we're in this first inning of this massive change in how we organize this global society. And therefore, I don't believe in the 4-year cycle. I believe that we can continue ripping through, $150, $175, $200,000 Bitcoin because of this massive macro overlay of what is happening right now between now and the end of the decade.
The world isn't sleepwalking into monetary chaos. It's sprinting toward it, fueled by rising debt, geopolitical stress, and a technology revolution that's outpacing old economic frameworks. Central banks may act cautious on the surface, but beneath it, the printing press is warming up. From U.S. defense budgets to China's hesitant stimulus and Japan's debt spiral, the script is becoming familiar. When faced with systemic risk or social unrest, governments print first and ask questions later. Arthur Hayes sees this clearly and makes no attempt to sugarcoat it. In his view, markets are massively underestimating how much fiat is about to flood the system. He believes we're at the beginning of a deep societal shift, one where the entire structure of money and labor could change. Against that backdrop, betting on hard assets like Bitcoin isn't just smart, it might be necessary. Hayes argues this isn't a traditional cycle, it's the start of something bigger. Forget having charts and short-term hype. If governments respond to systemic shocks with more liquidity, as they always have, Bitcoin isn't capped by models, it's driven by macro reality. Hayes is planting a flag. The next leg up isn't speculative euphoria, it's structural, and Bitcoin could be the only asset ready for it. Let's watch clips from Arthur Hayes' explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
I think we're starting to get to the real meat of the cycle, middle of the cycle, because if you think about, Trump's a new president, obviously it's the second term after the Biden administration, and his first term, he's a very populist president. He did the biggest sort of handout to American people since Andrew Jackson with or probably LBJ with sort of the COVID stimulus checks, right? That's not a very traditional Republican sort of measure to basically say, let's just hand out money to people, make sure that they stop bitching while we lock them in their house for the flu. And so when that happened, he is, have bona fide credentials as a person who's he wants to win elections. He doesn't have ideology behind it. So winning elections means providing free shit to people. He provided the free shit during COVID. He provided the free shit in 2017 with one of the largest tax cuts ever in American history. And he's going to provide more free shit. Otherwise, him and his, Trumpian Republicans are going to get voted out of office in 2026 and then in 2028 in the presidential election. So I think he knows exactly what he needs to do, which is provide free shit and print money. And that's what he's going to do. And now, obviously, the Fed and certain individuals within sort of the bureaucracy that is the American government have been sort of stymieing his efforts. But, domino after domino is being knocked down. And, by, middle of next year, it's going to be full steam ahead in terms of the Fed's on board, no more Powell. Maybe he's got 4 out of 7 Fed governors and he can do some other funky things with the interest on reserves or the discount window. And you have Bessent doing these sovereign wealth fund deals. You have possibly Fannie and Freddie ending conservatorship, and now they can lever their balance sheets and add about $4 to $5 trillion into the mortgage markets, allowing people to re-leverage on their houses. So yes, if the consumer runs out of cash, what does the American consumer do when they don't have money? They borrow it. And so if I reduce the cost of money, then you can borrow more. And so I think that's why the price of money in this instance matters. Now, I'm more of a quantity of money guy, but I can see that, you can say the American consumer is tapped out, the housing market's, a bit overbought. Well, if I cut rates from 4.5 to 2, well, then you're going to take more leverage and buy more stocks and, max out that credit card and buy a new car and take out a home equity loan. So I think that's a very short-sighted sort of explanation if you sort of believe that the Fed's going to start cutting rates and Trump is going to unlock all this liquidity on Fed balance sheets, the mortgage market. And, another thing that people are not really paying attention to is Wells Fargo has just been paroled out of jail. They were not allowed to increase their balance sheet for many years after the whole fiasco that the criminal sort of customer shit that they did back. I don't remember exactly what it was, but I think in middle of June or early July of this year, they were finally allowed to increase their balance sheet. There's a very famous macro analyst, Zoltan Pazar, who estimates that they have about 450 to $500 billion of capacity in the balance sheet to buy treasuries and other debt securities now that they can grow their asset base. And so you have another liquidity engine in the commercial banking system in the United States. So I don't really care a fuck about the real economy. All I care about is the credit, and the credit's going to flow, and it's going to flow into Bitcoin. I don't have the specific ratio, but in the presentation that I gave, I assumed that there was about 10 trillion of stablecoin deposits that would percolate around the markets. The protocols that I was shilling, Athena, I said it would 51x, basically based on people searching for higher yields in the treasury yield, going and using their synthetic dollar and the way that they're using the basis trade within Bitcoin to generate that yield. I think about a 34x improvement on EtherFi, as people now can spend the stable coins using their offline payment services and doing the sort of like banking services that EtherFi offers. And then Hyperliquid is something about 120 or 130x uplift, because it's going to become the largest exchange of any type globally now that you have all these people with stable coins who now want to trade on chain. Why do they want to trade on chain? Because they can. It's easy. High leverage, offers the type of products that they're interested in. So that's sort of where I want to focus in terms of like, obviously Bitcoin's going to do well. I don't know what that number is, but it'll be less than those in terms of the uplift. But sort of the riskier parts of the curve that'll benefit from this stablecoin adoption, I think, are these high cash flow generating DeFi projects. And the great thing about the zeitgeist now and sort of the investment community in the crypto space is that investors have punished projects that either A, never made any money, or B, made money but didn't give it to the token holders. And so if you're a project that is not buying back your token, is not giving back emissions to stakers, we as the crypto retail investor, or even some institutional investors, we don't want to touch it. I don't give a Sequoia and A16Z is on your cap table. Go fuck yourself. Where's my money? And so I think we're finally getting around to that ethos, and these projects that are going to do well are going to be paying us as the token holders for making them successful. Why is the Fed relevant? Because they set short-term rates. So they set the effective Fed funds rate. They have a band. They administer the interest on reserves, which is usually at the lower end of Fed funds. They also set the reverse repo rate, and which basically is at the high end of the Fed funds range. And if I'm a Treasury secretary and I'm issuing debt to some private institution who's a profit maximizing institution, well, if the Fed is offering a higher rate than what I am as the Treasury on a T-bill, then I'm just going to stick my money in the reverse repo with like a money market fund. Or if I'm a bank, I'm just going to lend it to the Fed at the interest on reserve. So I effectively, as a Treasury, cannot issue debt below where the Fed has the lower bound of the Fed funds rate. Now, if I have a stablecoin issuer who by law can only either A, put your money in the bank, which yields you almost nothing because too big to fail banks don't need deposits. They have enough. Or you can buy a Treasury bill. You can't buy anything else. You can't put it in reverse repo. Can't buy any other newfangled securities. I've regulated you by law. These are the only two things you can do. Well, now, I can set the short-term rate wherever I want because the marginal capital is not coming from money market funds. The marginal capital is coming from stablecoin issuers, and they want to earn a net interest margin, a yield on all these dollars that they have. And so they'll accept whatever yield I give them as Secretary of Benson. So if I think that the economy needs a 2% rate, okay, well, I'll sell T-bills at 2%. And there will be this effective Fed funds rate, assuming if I can't control the Fed governors. But in reality, the market's going to trade down at whatever 100 basis points below or whatever the number is. And so because these stable coins are regulated into buying the thing that I'm selling, I can sell it to you whatever price I want. And so another trick that they can employ to essentially neuter the Fed unless the Fed plays along and does what they want. I think the commercial banking system will become irrelevant unless one or two of them adopt stable coins, right? And this is why the whole fight about paying interest on them is a big thing. Because if I can easily pay interest as an issuer Why would I want a JP Morgan account? JP Morgan, I don't know what it pays, like 1.5%, 2% or something like that. I don't know. I don't have enough accounts, but I think that's around about the rate that you get as a depositor, JP or Citi or Wells Fargo, one of these large, too big to fail banks. But Fed funds is 4.25 to 4.5%, right? Money market fund yields much higher than that. And so the banks either have to raise their rates to match where the stablecoin is, because now I can literally, with a click of two buttons, move my money. It's all digital money. You have a digital bank run into stablecoins, or I have to raise my rates and reduce my profitability. Now, the best thing about a stablecoin issuer is that they don't have hundreds of thousands of useless employees doing all manner of bullshit, right? Yeah. Compliance is automated. KYC is automated. There is none of this legacy technology from the early 1990s percolating throughout your tech stack, which is a large bank. You don't have a bunch of useless managing directors making $1 to $10 million a year scattered around your organization doing fuck all, right? So Tether is the most profitable bank in human history, making something, I don't know what the per employee numbers. I had an essay about it, but it's in the hundreds of millions, I think, per employee. They have something like 100 employees. So, this is what a bank should be doing. I'm going to take your money and I'm going to pay you an interest rate on it. Then you can take this piece of perfected collateral and you can take it around the default Lego system and re-leverage it. You can trade with it. You can earn more yield with it if you want. But me as a bank, I just do something very simple. I just take your money and I let you send it from A to B very, very safely. That's what banks should do. They should be doing also the bullshit that we allow these banks to do in TradFi. And I can't wait for them all to be zeros.
While Bitcoin rides the wave of rising liquidity, stablecoins are quietly setting the stage for something bigger, a complete rewrite of monetary power. With governments preparing to flood markets and consumers leaning harder on debt, the rails are being rebuilt in real time. Stablecoins, lean and profit-driven, are already doing what traditional banks cannot, moving faster, paying more, and asking for less. If legacy banks don't adapt, they won't just lose business, they'll lose relevance. The future of finance may be simpler, faster, and fully digital. While others debate if Bitcoin should be higher, the smarter question is why it has already outperformed everything else. From gold to the S&P, nothing comes close when adjusted for monetary debasement. The real divergence isn't ideological, it's speed. Traditional finance bets on bond flips, crypto bets on velocity. As more capital seeks exposure without custody risk, public crypto equities become the new proxy. In this next phase, scale wins, speed matters, and printing isn't slowing down anytime soon. Let's watch more clips from his interview.
I think the premise of that question is a bit flawed because Bitcoin is the best performing asset when you think about currency debasement ever, right? Okay, yes, the S&P 500 is up in dollar terms, but deflate that by gold since 2009, the S&P has not recovered its gold price from 2008. Deflate the housing market by gold, again, and not anywhere close to where it was. Tech stocks are probably one of the only things that have big US tech is probably one of the only things that's done well deflated by gold. If you deflate things by Bitcoin, it's not you can't even see it on the chart. It's just so ridiculous about how well Bitcoin has performed. So, I got asked this question, like, why is there a difference between TradFi and crypto? There's not. Actually, when you talk to a TradFi person and sort of really get down to what they believe, what do they believe? They believe the same things that we believe. They believe that when something happens, the Fed, the Treasury, the BOJ, the ECB, the PBOC, the SNB, they will print money. And what happens when they print money? They buy bonds. So in their mind, because they know bonds and they did a CFA or they went to business school, okay, well, if I buy the 10-year at 5% and it goes to 4% and I lever that 30 times, I become Ray Dalio, right? That's their mind. That's all he did. He went long the 30-year bond on leverage. That is interest rate parity. I can't fucking shit on him. Good on you, like, for running that fucking trade, but that's the trade. We all believe in the same things. It's just that crypto is the faster horse. Bitcoin has been the best performing asset on this currency debasement theme across any asset class. So it's not that we have a difference of opinion. We believe the same things. We believe the money will be printed. It's just that we in crypto choose an asset that performs better. And so if you take a very short time horizon, like, I don't know, from a couple months ago, and you say, oh, why isn't Bitcoin at 150,000? Well, I'm sorry that you bought Bitcoin 6 months ago, but for anyone who bought it 2, 3, 5, 10 years ago, they're laughing. Like, I don't give a right? Where I have so much outperformed the debasement of the dollar and every other fiat currency. Like, why am I like being all moody that, Bitcoin is not, hitting a new all-time high every day? It doesn't matter that the S&P is at 6,700 or whatever it is. It's still down in gold terms from the crisis. So I think people need to readjust their perspective on this. If you thought that you were going to buy Bitcoin and the next day you were buying a Lamborghini, you're probably getting liquidated because it's just not the right way to think about things. I'm an advisor for UPEXI, UPXIUS, a Solana DAT. So obviously I intrinsically believe that this is a meta that will continue in the sort of the TradFi corporate finance circles. However, I would say that there's only going to be one or two winners in each category of coin, right? In Bitcoin, you've got MicroStrategy. It's kind of hard to come into a Bitcoin DAT and beat MicroStrategy. I know that there's been the Block 11 and a few others and the Nakamoto. But yeah, it's going to be very hard to upset Michael Saylor. And then you have sort of the Bitmain and the others in the East space, obviously UPEXI and some others in the Solana space, and pick and shitcoin, and there's going to be a DAT on that. So the question for you as an investor is, okay, basically what they're doing is corporate finance alchemy. If I can get my stock price high enough, the market cap high enough, if I can get my trading volume high enough, then there opens up all these institutional investors who are allowed to buy the debt and equity derivatives that I can sell. And the higher value of my stock, the more crazy shit that I can offer, which basically allows me to, positively accrete Bitcoin or some other shitcoin on my balance sheet and thus benefit equity investors. So it's a game of size and scale and distribution. And this is what Michael Saylor has showed us, is that you have a universe of underperforming money managers or indices that want the Bitcoin risk, that amazing volatility adjusted performance, but are not allowed to buy Bitcoin ETFs because they're considered usually currencies or commodities, and that's not within their mandate. They're not allowed to buy Bitcoin and custody it themselves because that's just not what they do as a money manager. So they can only buy public equity companies. And so if you're able to pitch them a public equity company, but has this crypto underlying, then they'll buy whatever you're selling and they'll pay $2 for $1 or $3 for $1 or $10 for $1, whatever. They don't go, right? They're just following rules. And so that's the game, but it's a game of scale. And there's only going to be one or two per each category. And then obviously, as we progress further in the cycle, the newer issuers are going to resort to riskier forms of corporate financial derivatives to generate positive equity price performance. And that's what will get people into trouble when the prices start falling. And so I think that there'll be some massive DAT debacles at the bottom of the cycle, right? FTX failed at the bottom of the cycle. BlockFi failed at the bottom of the cycle, not at the top of the cycle, not when we're on the way down. But when we have the most despair, when Bitcoin's already down 70% from $1 million or whatever it is, right? That's when these companies go belly up and they trade at massive discounts. And there'll be interesting opportunities for arbitrage funds in the public markets around the world, buying these into the discount and then liberating the crypto from the balance sheet. My belief is that Trump hasn't even gotten started. He's going to have all the Legos in place to really juice the US economy starting in, middle of 2026. And so the question is, what is the market forward on that money printing? I don't know what that looks like. If I believe that the market's expecting something so insane in terms of the amount of money printing that Trump can do, then okay, I'll take some chips off the table. So I don't have a price level in mind. It's more of a feeling of like, okay, well, is the expectation on the money printing too high or too low? I'm writing a piece right now about the collapse of the euro, predicated by a French default. And so I think there's some other things happening within the global markets that could continue to propel this notion of money printing. And at the background, I have to recognize that we are in the midst of a unipolar to multipolar change in world order. And change for politicians is bad because, what do they do when change happens? They print money to make sure people feel okay. And so if I overlay all these things together, I have a very bullish outlook for the amount of money that's going to be printed between now and the end of the decade. The question just becomes, what are the expectations within the crypto ecosystem about, or just a general macro ecosystem about what that is? I think that people are underpricing the upside in equities, in crypto, and everything. They don't realize how badly all these governments need to print money. Yes, it's going to end in absolute Armageddon at the end of the cycle, whenever that is, but I don't think we're there yet.
Meanwhile, Bitcoin's recent dip below $114,500 may look like a market cooling off, but beneath the surface, it fits perfectly into a broader narrative that's still building momentum. Traders are jittery, sure. The Fed's meeting-by-meeting approach doesn't scream urgency, and short-term profit takers are restless. But long-term holders remain unmoved, and for good reason. This isn't the end of the bull cycle. It's the calm between storms, one that might not be quiet for long. Arthur Hayes has consistently argued that the real catalyst isn't a rate cut or ETF approval. It's the unavoidable flood of liquidity governments will unleash to keep economies afloat. We're in a system wired to print when pain hits, whether it's mortgage leverage, sovereign defaults, or multipolar power shifts. The outcome is the same: more money chasing fewer hard assets. Hayes sees this moment not as hesitation, but as compression, the kind that often precedes vertical moves. Institutional flows, stablecoin infrastructure, and sovereign curiosity remain firmly intact. One soft weekend doesn't change the fact that crypto investment products just saw nearly $2 billion in inflows. Market fatigue? Maybe. Structural exhaustion? Not even close. As Arthur notes, markets can stall when expectations need resetting, but once the printing press roars again, and it will, Bitcoin won't just recover. It'll realign with the macro forces already in motion. If anything, this lull might be the last good entry before the next leg up. As we wrap up, where do you think Bitcoin goes next if the Fed prints again? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to subscribe.